Hi everyone, my name is Robin Speziali and I'm the national best-selling author of Market Masters. You can pick up my book at your favorite bookstore or online at amazon.com or amazon.ca. In this video, I'll be talking about the Canadian housing market, and it's entitled "The Truth is Out There." Canadian housing market, the numbers, opposing views, and who to believe. So, this is based on a newsletter I sent out in the spring of 2017, and it was before the bubble burst in Toronto real estate prices. It's August now in 2017. Who knows if we'll see further declines in the housing market? But there's been coverage all around the world about frothy, bubbly housing prices here in Canada. All right, well, here goes. I'll be honest, I don't know what the heck is going on in the Canadian housing market. Are house prices overvalued? Is this a nationwide bubble or just in pockets? Will the market crash? How severe and when? I don't know. So I thought, why not call the one guy who seems to have the answer, Marc Cohodes, Home Capital's notorious short seller. But before we get to my phone conversation with Marc at his chicken farm in sunny California, here's some housing data. So these are the current average prices for detached houses as at April 2017. In Toronto, the average price for a detached house was 1.5 million. In the Greater Toronto Area, the average detached house price is 1.2 million. In Vancouver, the average detached house price 1.6 million. In the Metro Vancouver area, the average house price 1.5 million. Wow, is this a dream? They're all $1 million plus houses. Pinch me. So back to reality. Let's conduct an experiment and use CIBC's mortgage calculator. Imagine that you're a young family new to the market and want to buy an average $1.5 million detached house in Toronto. And we're not talking about the top of the range, best neighborhood house. Just an average house. A 20% down payment on that average, quote unquote, $1.5 million house would be $300,000. And so the mortgage would amount to $1.2 million. Obviously the $1.5 million house price, subtract the $300,000 down payment, and you get your, $1.2 million mortgage. Oh, and by the way, CIBC's online mortgage calculator has a limit of $2 million. I'm not kidding. We're getting so close. Okay, so we'll choose the 5-year fixed closed mortgage, which on CIBC was 4.79% posted rate with a 25-year amortization period. Then we'll click submit and we get a whopping $6,800 in monthly mortgage payments. Now let's say we're the average Torontonian family. Our average household family income would be around $75,000. Okay, that's household family income. 2 income earners on average together, $75,000 total. That's it per year. And that's just gross income, okay? So we need to subtract federal and provincial income taxes from $75K, which leaves us with just $60,000 in take-home pay. Now, can that average income afford an average detached house in Toronto? Hell no. Buying a $1.5 million house in Toronto right now, remember, this is me talking in April 2017, before the bubble started to burst, would mean forking up $300,000, 20% down payment. Heck, good luck for most people. Then that would mean paying $82,000 in mortgage payments every year for the duration of the mortgage. The actual figures may vary based on differing mortgage loan factors, but you get the point. That's well above the average Torontonian family's cash on hand for down payment and take-home pay. Plus, families still need to pay maintenance costs, hydro, as well as eat food and clothe themselves to survive. No duh. Indeed, houses are extremely out of reach for so many people right now. And again, I'll remind you, this was April, and the prices started to crack July, August. In 2014, I bought a new 600 square foot condo located in Regent Park, a former quote-unquote slum neighborhood east of Toronto, downtown Toronto, that's being completely redeveloped with market condos. I wanted a good deal so that I could afford to enter the Toronto real estate market at the time. Remember, I didn't have a trust fund waiting for me. Daniel's gentrification is expected to complete in 2020. Anyway, let's say that you, the quote unquote average young family in our experiment, give up on buying a house in Toronto. Well, years ago, one could find cheaper housing alternatives in the Greater Toronto Area, the GTA. But guess what? Cheaper today means $1.2 million in the GTA for a detached house. There goes that alternative. This example is pretty much exactly the same in Vancouver, where detached houses are 1.6 million and its surrounding area not much better at all, $1.5 million. So the question is, who can actually afford all these $1 million plus detached houses in Canada's most populated cities, Toronto and Vancouver, and their surrounding regions? What's going to happen to all the disenfranchised average Canadians who want to buy a house but can't because they're priced out of the market? How much foreign capital is actually being pumped, or I would call laundered, into the housing market? And what happens when that foreign demand slows? Are foreign students actually using gifted money from parents as down payments with no income of their own in Canada to obtain mortgage loans at Canadian banks? Do some Canadians have an insatiable drive to trade up their house every couple of years? Am I seeing more McMansions sprout up in the newer GTA suburbs? Are Canadian banks' underwriting and lending practices really that sound? Have we overextended ourselves in debt? Mortgage and consumer debt in Canada is above $2 trillion, and mortgage debt is 75% of that total. Can house prices go up forever? And does this mean I'm going to live in my 600 square foot condo for the rest of my life? What's going to happen to all those real estate agents, including the part-time agents who have full-time jobs and make client calls during work and then show houses at night? If I attend one of the many get rich by investing in real estate seminars happening in Toronto, can I actually get rich? Should I tell my parents to sell their $1 million plus house in Mississauga, cash out, and live like royalty in some warm country? Can these speculators / house flippers sell to a greater fool forever? Should I listen to those TV commercials and actually take out a home equity line of credit on my home because I feel so quote unquote house rich? Can house prices really rise faster than salaries forever? What happens to the variable rate mortgage holders when the Bank of Canada finally raises rates overnight? Who's left holding the bag if and when there is a crash in the Canadian housing market? These are all the questions I'm asking today. Something's gotta give, or so I think. These three guys, Marc Cohodes, Hilliard Macbeth, and Carson Block, all think that a Canadian housing crash is coming. Marc Cohodes, this is my little piece on him. I called Marc last week. He's the guy who shorted Home Capital, Canada's alternative mortgage lender. I asked Marc on the call, what's going on in the Canadian housing market, Marc? To which Marc replied, the Toronto, GTA, and Vancouver housing markets will all likely crash. People there don't make that much money to sustain a market. Only a small segment of the population makes $200,000 plus to actually afford those houses. Remember, housing is shelter, but now Canadians are trading houses like they're stocks in the Vancouver Stock Exchange. A big storm is coming. Scary stuff. So I then asked Marc, what should the average Canadian do? He replied, sell all of your Canadian stocks and convert your cash to US. Now, this isn't my recommendation to you, it's just what Marc said on the call. Hilliard Macbeth. I also contacted Mr. Macbeth. He's the guy who wrote the book, When the Bubble Bursts, Surviving the Canadian Real Estate Crash. I asked Hilliard via email, Hilliard, what do you think will finally break the markets back? To which Mr. Macbeth replied, regarding the proverbial straw that broke the camel's back and its timing, these are questions that everyone asks all the time, going all the way back to my first interview in September 2014 with the Globe and Mail. Unfortunately, there's no easy and definite answer. In fact, it is impossible to predict what factor or factors will be the catalyst, and in the end, will it really matter? The exact timing doesn't matter except to people who are trading houses or condos like stocks and trying to squeeze the last drop of profit out of price gains with a plan to sell at the exact top. Anyone that is familiar with the real estate industry's lack of liquidity for sellers will recognize immediately that there would only be a few sellers able to complete that difficult task, and those few would need a lot of luck to pull it off. End quote. Hilliard went on, he said, I conclude in the book that the way to adjust your exposure to real estate is to sell before the market peak and before anyone knows that it is the market peak. And then he said, since I can't successfully predict the timing, I prefer to focus on what we know and what we can do. First, it is a bubble of mass proportions. He's referring to the Canadian housing bubble, and all bubbles burst at some point. Second, the unwinding of the bubble will take years, not months, and so people should avoid getting too aggressive, trying to buy while the market is falling in the first year or two. Third, there are significant exposures within the investments related to real estate, primarily in finance, that many people are very heavily weighted in their investment portfolios. The Canadian banks are the best example of this concentrated bet that investors are not paying enough attention to. All right, now I'll go to Carson Block. He's the third in our set of contrarians, those thinking that the Canadian housing market would pop. Carson Block, like Marc Cohodes, is a successful short seller. I was just about to contact Carson and get his opinion about the Canadian housing market when news hit Bloomberg, stating, and Carson was said, I'm starting to believe that there could be some real problems with Canada, particularly given what happened to Home Capital in recent weeks. I kind of wonder if Canadian investors are really nervous. Carson concluded the interview by warning that conditions seem to exist for there to be some pain inflicted on the markets. That suggests that Canada is the hottest market in the world for short sellers. If not, it could be. Damn, if the doom and gloom guys like Marc, Hilliard, and Carson are right, then things aren't so sunny in sunny ways Canada. But what about the experts sitting on the other side of the fence? Stephen Poloz, Benjamin Tall, and Evan Siddall. Let's take a look at their arguments. Okay, so Stephen Poloz. In May at the Group of Seven meeting of finance ministers and central bankers in Bari, Italy, Stephen Poloz, governor of the Bank of Canada, tried to clear up doubt about Canada's mortgage lending practices, including the crash run on the bank of Home Capital. In quotes, Stephen Poloz said, we'd be looking for signs that there are problems with the financial system as opposed to preoccupying ourselves with individual institutions. The question would be, what caused this? Is this something unique to the institution itself, or is it something in the system? I think this situation, Home Capital, is pretty clear on that. It's idiosyncratic. Benjamin Tall. And then also in May of this year, Benjamin Tall, deputy economist at Canadian Imperial Bank of Commerce, CIBC, said, it's clear that the Home Capital situation is not the ultimate test of Canadian housing. The situation is contained and the quality of the assets is solid. Any reference to the reality from the central bank will carry a lot of weight. And now thirdly, on the other side of the fence here, the positive thinkers in the Canadian housing market, there's Evan Siddall, who's the chief executive officer of CMHC. Evan said, we don't think this is a pervasive problem in Canada, it's a discrete issue. The quality of the portfolio remains quite high. There's no specific concerns really in that portfolio or any part of the business. We have a robust fraud mitigation system in place and it's working. Phew. All right, this is a lot to take in, and I still don't know what to think. Again, guys, I'm writing this in April 2017, before the Canadian Toronto Vancouver housing price started to slide. I thought they were going to slide, and they did. So again, in April, I stated it's concerning. Should we listen to the experts? If so, which ones? It's the crash and burn guys versus the everything is going to be all right guys. All I do know is that one side is probably going to be right. Time will tell. But for now, the truth is out there somewhere. Guys, comment in the comment section of YouTube here. Tell me what you think about the Canadian housing market. Are we going to fall further? It's August 2017 now. What does the future hold? Thanks for listening. Talk soon.